Robschild. Nothing I say is investment advice. Welcome to the show where we look at financial markets through crystal ball gazing. JP Morgan once said, millionaires don't need astrologers, but billionaires do. And so we begin. Today is January 22nd, Monday, 2024. As I have been mentioning in previous videos about Bitcoin breaking and continuing to break down lower, the crystal ball was clear, and it's breaking today. We have the chart right here, the Bitcoin. We had held this area about over $40,000 per Bitcoin, and today we cracked it. We cracked it pretty good. And as we speak, we're sitting right under 40,000, as you can see there. My expectation is to get down to the 30,000 level. A lot of people are saying the 26,000 level is the one to go for, but the more people that know about that level, the weaker it gets. And so when I use my crystal ball, my target is the 30. For those of you that don't know, if you want to ever short Bitcoin, there's a little ETF called BITI that's easy for retailers to get in and out of to participate in shorting Bitcoin if that's something you're interested in doing. Again, nothing I say is investment advice. Moving on, here we have the S&P 500. As we had talked about in previous shows, we were looking to see if knocking on this door of 4,800, if it eventually would open and we'd break through, and we did on Friday. And today, we were trying to see if we'd have some more follow-throughs for even more bullishness or more squeezing people out of their shorts, but instead we ended up with a pattern called a doji. And so this is an indecisive pattern, and typically it means a little bit of a reversal. And so the crystal ball is showing that we're probably going to be revisiting this 4,800 level to test whether it's strong or not. If it holds up and we don't close below that level tomorrow, then that is a very bullish sign for the S&P 500. So it's moments like these where I need to really gaze into the crystal ball to see, will 4,800 hold or will it break? And it's not 100% clear, but I believe personally it will hold. There's not really any data coming out. There's a lot of earnings coming out, but I don't think there's anything that is strong enough to break the 4,800 level yet. I think we're going to be heading up to the grand 5,000 level on that chart for a variety of reasons that I can see in my crystal ball. I won't get into detail here. Next chart that really sparked my interest today, XHB. This is Home Builders Index. This is how confident people are in housing, in the pricing of housing. Now, like you can see when I zoom out to 2021, we never had a problem blowing through this this previous top here. In fact, we went right through it, and today we have a new all-time high. Again, these green candles here looking pretty big. This one's looking pretty big itself. That's very, very, very bullish looking. That's a very bullish looking chart, and is very relevant to what's going on, what happened in markets today. The next chart I want to share is the 10-year yield. When this goes up, the value of the Treasury 10-year note. When this goes up, the value goes down. When this goes down, that value goes up. And my crystal ball on Friday had seen this topping tail right here as you can see, is a reversal pattern. Typically, when you see a little candle like this with a topping tail, you can expect at least a little bit of a reversal, and we did. And we see a little doji here, so really anything can happen from here. This is still a bullish chart overall. The yields still are comfortably moving higher. We're not seeing a reversal quite yet in yields. I say yet because I do believe that yields overall are headed lower. There are 6 or 7, well now it's 6 cuts priced into the Fed funds futures that are expected for this year. So I'm not the only one expecting lower rates, and so if the Fed funds futures play out, certainly we should be seeing some lowering of yields further out in the curve. A few other charts that have been catching my eye lately, I've been talking about this one lately. This is a rare earth strategic metals ETF. If you zoom out to the max, this goes back to 2011. This is what, Benjamin Graham in his book Security Analysis discusses the value of suppressed markets, and something that's been suppressed for long enough typically is very fertile ground for growth, and this one is just getting cheaper and cheaper, and it seems like there's just no bottom right now, but it's getting very interesting. And the most interesting part about this that I keep bringing up is we have all-time highs in the S&P 500, and this is not correlating to that at all. And so what you could be seeing eventually is a broadening out of investment where some of the other stocks besides the Magnificent Seven and the semiconductors get a little bit more attention. Certainly that could help skyrocket the S&P 500, even blowing it right past 5,000 if we were to get some more strength in other areas, in other stocks, and other stock valuations. The stock market right now overall is very skewed towards mega cap companies and semiconductors. We don't, and the funny thing is that it's making the whole market overvalued as a whole, but there's a lot of areas that seem to be undervalued right now. And if we are to see an expansion of the value of things that are undervalued on top of these things continuing to grow, or even just holding their valuations, we could be seeing a pretty bullish setup right here. Again, longer term, it's really important to note that the yield curve is inverted, and that's not a good sign. When we're expecting rates to be cutting, it typically means that the markets are seeing weaker and weaker data coming in, companies being able to earn less money, people being able to spend less money, and then it snowballs on top of itself. People see their account sizes shrink, and their perceived wealth is smaller, and people want to save more and more money. It's a contraction. It's coming. It's definitely coming. It's like nobody knows when, but yeah, when I look into my crystal ball anyway, I'm seeing bullishness, and I don't know when it's gonna crack. And that's kind of the overall story right now in markets that I personally see. Could it end tomorrow? Yes, it could. Maybe there's a crack in there I don't see in my crystal ball, and maybe this is the ultimate peak today, and that markets are going to come crashing down tomorrow. This is it. This is the top, the big top for the next 30 years. Who knows? But so be careful out there, friends. Another chart I've been this is probably the most important chart out there right now, the EWZ, the Brazilian ETF. I was thinking I might still do a separate video on this one, but this is a heck of a chart. If we zoom all the way out, going back to 2008, you know, we can even see all the way back what was going on in the 2000s. You know, I had mentioned what's going on in this one, the REMX, the Rare Earth Strategic Metals ETF. This is a similar kind of setup, but it's not so specific. It's a whole country. It's the S&P 500 of Brazil, a place with strong demographics, strong growth. There's a big producer of things that are used around the world, metals, food, you name it, Brazil's got it. Now, this had gotten in price all the way back in 2008 to about $100 a share, and from that day we have never seen it get back up to that price. You know, this is one of these kinds of markets that's super due for a correction, and I've mentioned this in other videos. I'm going to show it again. We have a knock, 1, 2, 3, 4, 5, 6 knocks on the door. We broke through it only in November, and literally right now we're testing to see if this can hold. If this holds here and we see, this is a weekly chart, if we can see a green candle come up off of this line, it's touching it already. If we can see it bounce off of it, that is an extremely bullish looking chart. One that may be worth participating in, let's say. Again, nothing I say is investment advice. A way to get a little bit of leverage on this, if you're interested in, you know, I mean, if we just look at the price here, $30, even if we were to get up to that price in 2008 of $102, that's tripling your money there. And taking a look at, you can take a look at the yield here. It's almost 6%. This will go up and down, but comparatively, the S&P 500 ETFs like SPY, VU typically yield less than 2%. And so if we can have these equalized to any degree at any point, at any time soon, you could expect, at least for this ETF, I would think, to be able to double fairly easily from here. I think Benjamin Graham would approve of this move. If you're interested in getting leverage on Brazil ETFs, there's of course the small caps, which automatically have more leverage to them. So that's even drier gunpowder. If you really want to go heavier into it, there's also a double leveraged bull fund of Brazil, BRZU. So whenever EWZ goes up 1%, this goes up 2%. I just want to emphasize the power of leveraged ETFs. A lot of people don't like them, especially professionals, because of the expense ratios, but on top of that there's other fees, and then because they're derivatives, they automatically have they kind of get chipped away. So the amount of risk that you take, you don't get the full reward for the amount of risk that you take, basically. But just to share some of the power of funds like this is called QLD. This is the NASDAQ, but double leveraged on the same thing. It's the same fund as BRZU, sorry, being double leveraged. But this one followed the NASDAQ, and this fund actually opened in 2010, where its relative price was about 77 cents, and has since gotten up to $80, down to $17, and back up to $54. So this vehicle of having double leverage in a really bullish scenario can really give a pretty nice boost to your returns if you're really bullish in a certain market. Sorry, this is the the triple one, the double leveraged one. Here it is, QLD. This is the double leveraged one, which we had about $1, and now around $80-90, and back from 2006. And so you can see how that kind of leverage can give you that much upside potential. The other one I had open, this is actually triple leveraged, not double leveraged. And so as you can see, from a downturn, you actually have this high here is lower than this high here relative to the loss in only the double leveraged fund. And so obviously the more leverage you have, the more exposure you have to downside risk, not just the upside risk. But that chart pattern, the EWZ, along with all the other things going on, it seems to me that this is a very nice spot to be. When I look deep into my crystal ball, it's probably my favorite place to look at. And that's all I have for you today. Thank you for watching, and see you next time. Robschild.